Everyone, it's Andy Yu here, and this is
Caleb Gan.
Okay, so we have been in the financial industry for the past 15 years. Okay, so every time we share this video, we want to share with our investors and also to the public so that everybody can learn more about the Singapore stock market or even the Hong Kong, the US stock market. So if you want to know more about the potential, trading ideas, okay, please stay on this channel and remember to like and subscribe to this channel. Okay, so go ahead, click the like and subscribe button. Every like and subscribe will actually encourage us to do more good content for everybody. Okay, so go ahead, okay, like and subscribe this video and continue this to watch until the end. So at the end of this video, what will they learn?
Okay, you will learn what are those banks that we are looking at, and then outside of Singapore, what other banks that is potentials that you can invest in Singapore dollar through SDR as well, which is a new product created by SGX, and is getting popular and popular that you must know if you like bank stocks.
Okay, other than that, right, I also share one stock, right, that went, like 100 times over the past 20 over years. Okay, 100 times. Okay, so if you want to know what is this stocks and what are the potential, okay, and how you can invest with just less than $1,000, how you can start investing with less than $100, $1,000. Okay, stay tuned. Okay, watch this video till the end. Okay, so today our topic is what?
Stock to watch in Singapore for 2025.
Okay, so let's say right now I have a sum of money. Okay, so if I want to invest, okay, for a good return, very good return.
Okay, before that, right, as a financial advisor, standard practice, usually people will ask, hey, how old are you, and how old are you, and what is your
I don't want the
income?
Financial advice. I just want to be a trader.
You just want to be a trader?
I don't want a financial advice. Not for retirement. I don't want for what retirement, all that. Okay, I just want to based on the price action. I don't want what for long term dividend. Okay, I mean if you got dividend it's fine, but I don't want I buy and then the stock don't move. Okay, so I don't know what do you prefer, right? Okay, let me know in the comment below. Okay, but for this episode, okay, the 5 stocks to watch in Singapore 2025, I will want to have mega cap or blue chip, big company, banks, all this. I like banks. Okay, so big company, and also 1 year the stock can go up potentially 20-30%. It's okay. Okay, it's okay because ultimately, if let's say we just want to aim low if we can get more, then that's a bonus. Okay, so 5 stocks to watch. Okay, what will be the 5 stocks to watch in this case? Okay, is there any stocks you start to watch already?
Okay, basically I think if we are looking at the growth, all right, I think bank is still for me is my favorites. All right, price appreciations, plus the dividends. Okay,
plus the fundamental, all this you don't have to headache because bank collapse means the whole Singapore gone already.
That's true. All right, so unlikely this will happen in Singapore Okay, so bank is still my favorites. All right, and then of course it can be have another what we call that growth stocks. Okay, in Singapore as well. The other one.
Some people will ask banks already so expensive. Then now you tell me 2025 you still want me to look at bank. So a lot of people they will ask this kind of question. They will question you.
Wow. Okay. How to answer any? Okay. You are the one who asked me.
Okay. So basically I will answer it this way.
All right.
Okay. So in terms of if you talk about low, cheap, or expensive, right? Bank is definitely not cheap. Okay, not cheap. But the banks that are the strongest stock, they are the leader. They are the market leader. Okay. So what do we mean by market leader? That means when you look at STI, when STI go up, actually it is actually contributed by bank stocks. Okay, so this OCBC, UOB, DBS, they go up, and that's why this STI is breaking into new high. It's not like you go and buy Genting Singapore and then because Genting Singapore go up, then STI go up. Okay, so I think one of the reason, right, why we still look at banks okay, is because number one, a lot of people they buy REITs and then now right, they are stuck. Is it true?
Yeah, I think so, because currently, I mean, most of the REITs are, pull back, okay? But I still have opportunities.
Yes, of course, there's definitely still opportunities. But for me, I think banks are more like kind of like resilience during the past 1-2 years, and even until the end of 2024, the banks is still quite strong. So in terms of strong, I would say banks is still strong. Okay, so over here. Okay, what? Okay, so example, let's say which bank? Does it matter? UOB, DBS, OCBC, or there's an overseas bank?
I mean, personally, for me, it doesn't really matter. All right, as long as the bank that we are talking about is the Singapore banks. I think if you look at the chart, or if you look at the chart pattern of these three banks, they are similar. That means they are moving upward, or what we call that uptrend. Okay, but however, in terms of the price, of course. If you compare with DBS and OCBC, of course, the OCBC will be much more cheaper, right? So usually based on a human being, of course, they will look for a cheaper asset to invest in.
Yeah, look like right now, as of now, OCBC is not the one that is running too fast, okay? And now, yes, I think it's still, haven't really break out into the new high. Okay, but again, that's another problem is, we always think that, hey, these Singapore banks, they looks very expensive. $16, okay, for OCBC, and this DBS is how much? Okay, DBS is like 44, only $44. Wow, so expensive, hey. Okay, if I want to buy, some of the beginners they say, hey, can I buy? How much money, minimum to buy this DBS? Okay, how much upside can they go? Right now. Okay, so is there any other banks? Okay, I heard there's this SDR. Okay, SDR recently, Singapore, they actually have this Singapore Depository Receipt. So this SDR, right? Okay, example, you just tell them in simple terms what?
Example, okay, this SDR, right, is actually, they based on this Hong Kong listed stock. Popular one, like for example HSBC, currently trading in Hong Kong Stock Exchange in Hong Kong dollars. All right, so with this SDR, okay, basically XGX, okay, listed this HSBC in Singapore Stock Exchange and trading currency in Singapore dollars, and the minimum share to invest in this HSBC that listed in this XGX is only 100 share. So this is one of the example, okay, that Singaporeans who are looking for bank stocks, I mean outside of the Singapore, for example HSBC. So this actually give them an opportunity. Okay,
I think yes, it's an opportunity. Okay, not only Hong Kong stocks, there's a SDR. Thai stocks also got SDR. So there's this Kasikorn Bank. Okay, this Kasikorn Bank, right, is a Thai bank. Okay, K Bank. So if you look at the Thai stock, right, there's this K Bank, which is Kasikorn Bank. Okay, it's actually listed in Thailand. Okay, it's in Thailand. So you can see that actually recently it dropped from 157 to 147. Okay, and then now it is recovering. It looks like also going on the like a kind of like an uptrend. Okay, so if you want to buy this Thai stock, okay, it's a Thai bank stock. Okay, Thai bank. You don't have to change your money into Thai baht. Okay, in Singapore market, right, TKKD. That's the code. Okay, there's this stock code here. TKKD. Okay, TKKD is the stock code in Singapore terms. Okay, so what happened here in this SDR is they will convert the Thai shares. How much is it? And then they will follow to and duplicate it in Singapore. But in Singapore, right, this bank, right, is only $6 right now. Right, it's only $6 right now. So compared to some other like people look at OCBC DBS UOB okay, in terms of the price this looks like cheaper right, this looks like cheaper, but in the real term in Thai baht they are actually, if you look at K Bank, okay, it's $100 over okay. So basically if you are looking at alternative, not just Singapore bank, but you still want to invest your Sing dollar in Singapore, inside the SGX Singapore Exchange, right? Actually, you can also look at this TKKD, this code, stock code. Okay, this is what we call one of the new one of the new product in Singapore. Okay, the Thai SDR and the Hong Kong SDR, new as in a few years only.
Yeah, I think people who are worried about what we call that currency risk, okay, actually SDR actually solve the problem, right? So that you no need to worry about currency risk right now. Everything is in Sing dollars, even though the dividend payout as well, okay, will be in the Singapore dollar as well. All right, so with this SDR, actually, it has the advantage. All right, it opened up our what we call that, investment, outside of the Singapore. Okay, so that you can participate in Thai bank, you can participate in Hong Kong listed bank like HSBC, Bank of China as well. Okay,
so HSBC right now is only $2.55 Singapore dollar. Okay, so $2.55 Singapore dollar. So in some people, right, they say UOB, DBS, all this so expensive already, right? Okay, OCBC, wow, all this, like some people they will feel that hey, this one is expensive. But people who are holding, it doesn't matter, they can just hold on to the US stock. People who are holding this DBS, UOB, OCBC, where the price is so expensive, right, they also asking the question, now still can buy or not? Okay, now still can buy or not? So we see that some opportunity, right, is actually on this HSBC because it's $2.55. And how about the performance? What do you think about the performance HSBC? How do we know whether when we look at the SDR, we should look at which chart? The SDR chart or the Hong Kong chart?
We should look at the mother share, which is the Hong Kong listed HSBC. All right, so we look at the chart, and then from there we analyze.
Yeah. So it's the chart. What do you think? Is it nice?
The charts obviously is nice. Okay, uptrend. Okay, it means that what we call it, it's still considered strong. Okay, it's keep moving upward.
And I think when you look at this HSBC, right, okay, as compared with the Hang Seng Index, you see, okay, over the past 1 year, actually Hang Seng Index, right, is actually going down. Alright, it's actually going down. So Hang Seng Index is not that strong. It's not as if right now it's breaking into the new high. You see, so right now it's actually from 23,000 it dropped to 19,000. Okay, from the highest point recently it dropped like 20%. Okay, so in other words, right, Hong Kong market is actually still at the low point. Okay, still at the low point. However, just now when we look at this HSBC bank, right, okay, it's actually quite strong. Okay, it's actually quite strong. Okay, so in terms of the strength, it is quite strong. In terms of the SDR, the price is also quite cheap. Okay, so these are good for bank lovers. I know Singapore, right, there's actually a lot of people, they like to invest in banks. Why?
Dividend payout, maybe.
Dividend?
So, Andy, do you know about dividend payout for HSBC?
I don't know. Can you tell me?
All right. Okay. I just did my homework. Okay. HSBC Bank dividend payout is around 6%. Okay, per year, 6% based on the current price. All right. Okay. So it's quite attractive. Okay, with current dividend payout also based on the current price. Okay. So like what Andy mentioned is that Singapore Bank,
how many times the bank did this HSBC pay dividend?
Okay, that one I need to check. Okay, I haven't checked it out.
Look at the chart here.
Oh, there's a payout.
1, 2, 3, 4. Okay, so there's 4 times. Okay, 4 times. So HSBC pay 4 times, and total the one whole year, as this Caleb actually see is about 6%.
Yeah.
Okay, it's about 6% right now. So over here, okay, I will see that as long as you are an investor, of course you don't want to buy at the highest point. Okay, we are talking about like what are the simple investment strategy that is actually good for Singapore investor. Okay, I just want to ask Caleb, we have like few thousand clients over the past how many years as a reminder?
15 years.
15 years as a reminder. So Caleb, and me, we have been in this industry for 15 years. People who invest in banks, what are the results, or what are the experience when people invest in banks as compared to go and invest what venture, all this Brad talk last time, like super, don't know what. Super, there's one company.
You mean coffee?
Super Coffee. Last time there's this Super Coffee. And some people they just stick to banks. So like some people invest high P. Remember?
Yeah,
all the
that's
stocks.
true. I mean, based on the Singapore banks, right? Singapore bank, no doubt, is still the best bank. Based on my experience, that is still the best bank in the world. I can say that. Based on the historical data, since IPO, Singapore Bank, it keep going upward and then break high. I have never seen, Singapore Bank break low. So it keep moving up. Every time there is a market, corrections, big drop, eventually that was the time to, accumulate Singapore Bank. And then, when the economic recover,
they are wrong or what?
Okay.
Some people, what they do, like those big boss, because some of your big boss kind, they accumulate wealth. Do you think?
I think a bank is the right asset for them to accumulate. I think it wouldn't go wrong, Andy, if they invest in the Singapore banks, unless you are talking about probably they enter at a high price. That might worry them. But eventually, if you invest for a very long-term, what we call that horizon, I think you will see what we call that return eventually.
I think as long as Singapore progress, Singapore progress as a country, we are still a financial hub. This is a kind of like a you are investing in Singapore, the infrastructure. You are investing in the banking system, probably one of the best in the world banking system.
I think there are a few factors. What I strongly believe is because Singapore dollars, plays a very big part, to Singapore stock, especially Singapore bank as well. So, like for example, I believe foreign investors who have Singapore dollars, obviously they would like to invest in a Singapore stock, and one of the sector they are looking at is the bank. I believe so.
Yes, and over the years I have seen like a lot of people they invest a lot in those REITs. So after a while, right, because REITs is actually seasonal, cyclical. So eventually, right, people who invest in banks, outperform this people who invest in other things. Maybe you can say that just now, right now, the REITs is not doing well. But we are in this industry for past 15 years. So eventually, the conclusion is if you want over the past 15 years you want to do well in Singapore, banks is the answer. So for 2025, if you look at Singapore, one of the 5 stocks or 2 of the 5 stocks or even 3 of the 5 stocks, right, how many will be banks?
How many will be banks? Very good question.
Let's say we have 5 stocks. 5 stocks to watch in Singapore. How many will be bank?
Personally, I think at least 2 will be. Alright. Personally, one of them I think obviously OCBC, should have in my portfolio. Alright. Then the other one, I think DBS or UOB.
Then the foreign bank some more.
Foreign banks some more. Very
SDR. Because now we can invest in SDR.
Yeah, you are right. HSBC. Which is I think one of my favorite as well.
So basically, with this whole episode, we talk about banks. So is there any other opportunity other than banks?
Alright.
Is there any other stocks to watch than banks?
If you look at the entire market, in Singapore context, bank is still the strongest one, and then other than that, I think probably other than that, maybe SD Engineering,
SD Engineering.
Yeah, SD Engineering, you can look at the chart, it's one of my favorite, Now, reason is because that for the past many years, these stocks is quite what we call that reliable. You can see that each time when it pull back, it recover. So these are the type of the stock that I like. And then at the same time, it's not so much about dividend. It's much more about the what we call that price appreciations. SD Engineering. You can put into your watch list as well beside bank stocks. What about Andy? What about you?
So for me, right, I also look out for the Hong Kong opportunity. Okay, Hong Kong opportunity. So if we are looking at the Hong Kong stocks, right? Okay, one of the stocks I think right now is still very cheap. Okay, especially this is actually one of the biggest company in Hong Kong. Okay, one of the biggest company in China. Okay, one of the biggest company in the whole Asia. Okay, so this company, basically I think there is a chance for it to recover. I think okay, so which is that? It's the SDR also. Okay, SDR. So this company is Tencent. Okay, Tencent. So if the Hong Kong market were to recover, okay, I will say that maybe right now, okay, this Tencent is still like a kind of like a low price. Okay, as I say, you can see from 480 it dropped to 400, so dropped 20% from the high. Okay, so right now it's considered quite quite cheap, right? Okay, quite cheap. Okay, for short term I would say short term is actually quite cheap. Okay, in like a kind of like a discount, So in Hong Kong, it's $400. Okay, $400. Scary enough to you?
Quite expensive in Hong Kong.
Yeah, so for beginners, sometimes they will feel that wow, $400. Wow, like never buy such a thing before. Okay,
yeah.
But so, in Singapore, SDR, let me see. Singapore SDR, how much?
$6.97 in Singapore dollars.
Okay, so now it's $6.97 in Singapore dollar. Okay.
And what is the minimum share that you can buy, Andy?
100 shares.
Because this Tencent's SDR is actually listed in where?
Singapore. Okay, Sing dollar about $7. So 100 shares is $700. So with 100 shares, okay, 700 Singapore dollars, right? You actually can start to learn about this Tencent. Start to start your trading, right, with this Tencent. So of course this Tencent, right, is high risk, a bit high risk. Why? Like I tell you, right, just 2-3 months ago it was like 480, then now it's 400, suddenly dropped 20%. Okay, this is how the Hong Kong exchange on the Hong Kong stocks actually move. Okay, so it's volatile. But do you know that this Tencent now is 400 in Hong Kong starting? Okay, do you know how much it start from? Okay,
good questions.
Okay, so if you go back, right, okay, in times to 2004, right, okay, this Tencent holding, okay, started I think around 70 cents. 70 cents. Okay, so from 70 cents, okay, 70 cents, it go up to $400 over. Okay, so in 2004, okay, after the IPO, the share price drop. Okay, so from just 70 cents, it go up to this what we call $400 over. Okay, in fact, the highest it went is 700. Okay, 700 over. So this is one of the biggest company in Hong Kong, in China. It represents like a index stock. Yep. Index stock. So it's just like the Singapore DBS, all this. So if the market were to move, if Hong Kong were to rebound, if China were to recover, I think Tencent is will follow. Will follow, and probably Tencent have the resource, the people to innovate, to do more on the IT, AI, this kind of thing.
Yeah, I think beside that, I believe US market already went up. Okay, so many people saying that, hey, is it too expensive for a US market? So maybe Tencent is an alternative, alright, because it not really moved yet. Okay, generally if you look at the China market and the Hong Kong market, is still near the bottom. Alright, so like what Andy mentions, if they are going to recover, of course this Tencent, I will consider it as a leader of the stocks. Alright, I believe it will recover as well.
Alright, so in this episode, right, okay, we actually learned pretty much on the Singapore banks, okay, and also these are SDRs. Okay, so let us know in the comment, okay, what else you want to ask. Is there any questions? Okay, leave some comment, and remember to help me to like and share this video with your friends and family. Okay, so till we meet in the next episode, okay, let us know. Okay, let us know what are the things that you want to ask. Okay, ask in the comment. Okay, and we will see you in the next video.